Welcome back to another episode of the Makers Podcast. Now, in today's episode, we discuss the future of fintech. This is a live podcast recording from our event that took place recently. In today's episode, yes, we discuss the future of fintech, but we also discuss topics such as how governments and regulators can help these amazing fintech companies grow, not just only in the UK, but also outside of the UK. My guests on today's episode are the founders and CFOs from Dozens, OakNorth, Soldo and Tandem Bank. But just before we dive into today's episode, I would like to say a massive thank you to our sponsors at the event, who include WeWork for hosting us at their incredible location at Aviation House. You must go and check it out if you're in the area. Our snack provider, Squirrel Sisters, who kept all of our guests from not going hungry on the night, but also to Tempo. Now, Tempo is an end-to-end hiring platform connecting tens of thousands of people to temporary and permanent non-technical roles with the fastest growing, most innovative companies in the world. They are trusted by the likes of Monzo, Uber Eats, Bulb and Babylon Health. Now, if you're interested in hearing more, just head over to heytempo.com. And just before we dive into today's episode, if you would like to attend one of our live podcast events, just head over to buymakers.co, where you can see all of our upcoming events. Now, let's dive into today's episode.
Thanks very much for being here. My name is Ollie, host of the Makers Podcast. I interview the most interesting, high-profile entrepreneurs to find out how entrepreneurs screwed up, because it's not talked about enough. We've got about 80,000 weekly listeners, and our latest guest is Mark Randolph, co-founder of Netflix. So please do tune in. But we've got four amazing speakers here tonight. We've got AC, founder of Dozens, Ricky, founder of Tandem. We've got Christina from OakNorth, and we've got Carlo from Soldo. A massive thank you to our sponsors, Tempo, who I think are going to say something at the end. You've hopefully all got a bite to eat from Squirrel Sisters, and WeWork, who are very kindly hosting us tonight. So, Nora, over to you.
Hi guys, how you doing? Good energy. Come on, how are you doing? Love it. Well, welcome. Thank you so much for popping into 125 Kingsway, otherwise known as Aviation House. WeWork, this is one of 50 locations just within London. So I hope you're impressed with the decor in here, because I absolutely love it. If you're ever around any of the WeWorks across London, or even just Manny, Brighton, wherever you are, we have them there. So pop in. If you have any questions, please see me at the end. Feel free to grab some business cards as well, and I can tell you more about how you can get involved with being part of the WeWork family. Yeah? Okay. Thank you.
Cool. Thank you. So this is how tonight's going to run. We're on social media, so please do follow us during the event. I'm going to have a conversation for about 10 minutes with each of the guests, and then we're going to have a panel discussion about the future of fintech, and then hopefully some time for you guys to ask some questions. So, AC, let's kick off. I ask all my guests 3 questions to begin with. You may remember when I interviewed you. What did you have for breakfast this morning?
Remember that being the hardest question you asked. It was very Islington-y muesli.
Okay.
That's chic enough?
Pretty much. So you started off your career at HSBC.
Yeah.
Why did you want to launch Dozens, and what is Dozens?
When I left HSBC, I actually did not leave with a view to starting something. It just happened. And the reason it happened is probably similar to why Dozens needs to exist. So I was actually too much of a banker for the guys that already existed. When I went to them sort of talking about what I wanted to do in fintech, they're like, where are the APIs? I'm like, what do you mean? This is a balance sheet problem. And there just wasn't enough meeting of the minds. So the reason Dozens exist is to actually challenge not just the UX bit of what banks get wrong, and there's a lot, and Ricky and others before Dozens have done an awesome job of addressing some of that. But the fundamental issue is, if you look at banking, our banks' platforms, where depositors meet borrowers, and then they should keep platform rents like Uber or Airbnb. They should keep 10 or 20% back. They keep 80% back and return 20%. So are they some advisors? But they make money when we borrow. So this is balance sheet level stuff that needs to be fixed over and above the UX bits. So at Dozens, we only make money when you do. We're kind of based around saving and investing, not around lending. And we just think it's a more sustainable model over the years.
I think when I last saw you, you just had 10,000 downloads back in April.
Yeah.
What are you up to now?
We're at 50,000 downloads now. We're at 20,000 KYC users. So it's been a good few months. You were lucky for us.
Good. Have you just done cheap advertising?
We've been doing some on and off tube advertising. Yeah.
Is that working? Is that going well?
We're not changing anything we're doing because whatever we're doing seems to be working. So we're very focused on the cost of acquisition. So our target cost of acquisition is £25, and we want to make around £50 per user per annum. So we stay very, very honest to those two numbers. And if we can do more tube ads while doing £25 overall cost of acquisition, then we'll do them.
You followed a lot of other fintech companies. You went to the crowd and raised £3.8 million, I believe.
Yep.
Why did you go to the crowd, and why was that important to get dozens going?
So not all of that was the crowd, but that was part of the round that we did with Seeders in April. We got around 2,100 investors from 42 different countries, which for a young fintech brand, in a very heated space is great. It just helps get the brand out, and rather than pay £25 to acquire you, we got people who not only paid us £20, which was our minimum level of investment, but then get shareholder cards, they feel a bit of ownership, they'll probably go and get 10 more customers for us. So it just made sense. So it was as much a growth play as a funding play.
And although I guess you're quite new to the fintech space, there are other people such as Revolut, Monzo, potentially doing the same things as you, as well as Nutmeg. Yapping at your heels, how are you going to beat them, and what makes you different?
So I think that philosophical difference of we only make money when you do the incentive alignment is a big part of why we exist and why you should choose us. But user experience-wise, the fact that you can have a current account, a budgeter, the roundups, fund savings rules like save every time it rains in London or every time Trump tweets, plus a whole ETF shelf for investing, all in one place rather than downloading 7 apps. Financial engagement is so low. I was actually talking to someone just before the panel, and they said, I've made my money, I have no time for managing money, and therefore I delegate it. And that's great because he can afford to delegate it, but there are so many of us, if you survey the audience right now, no one wants to manage their money. So why in the world would you download 7 different apps if you even got engaged and inclined? So the fact that you can do it all in one place is the reason you should be with us.
Cool. Ricky, great to have you here. How are you doing?
Yeah, really good. Great to be here. Thanks, guys, for turning up on a Tuesday evening.
Nice. So same question, what did you have for breakfast this morning?
I had 2 boiled eggs with my kids. Always have cooked breakfast.
Nice.
Start the day properly.
Good. So you firstly founded Azimo.
Yeah.
What is Azimo, and why do you decide to launch Tandem?
Azimo is an app to democratize money. The idea is that we're going to make it a lot cheaper for initially immigrants to send money home, now for anybody to send money internationally, and even we've recently launched business services as well. But ultimately, we want to make it easy, cheap, hassle-free for customers to get money back to where it can do the most good.
And you were one of the first fintech players into the space.
Yeah.
How much change have you seen in the last 4 years?
Well, I mean, the really cool thing is that over the last sort of 10 years, there's been a massive transformation in sort of startup culture in general in London. London, despite the fun of Brexit that we're all enjoying, the Brexit pantomime, continues to be an incredible place to start a business. London's super lucky because we're kind of a one-city country. Apologies to the people from other cities, but in that we have the center of finance, the center of regulation, and the tech center all in one place, which is different in the US. It's spread out even in Germany, and so we can really, there's been a hub from which fintech's been able to grow and prosper, and really the last 5 years has been incredible because fintech was a bit fringe to begin with, and investors didn't understand the balance sheet stuff you're talking about. It started really off in payments, and Azimo more on the payment side, but now really is UK is recognized as a capital around the world for digital banking, which is ironic because it was only 4 or 5 years ago that I was sitting there going, why isn't anybody doing sort of full service banking, retail banking, really helping customers with broader problems than just where to put my money at 0.1% interest, which is what the banks seem to be serving up. And so, I think that the scene's completely transformed. Loads more unicorns, lots more excited entrepreneurs. people leaving university thinking, shit, I want to be an entrepreneur, work in an entrepreneurial business, rather than I want to go to HSBC. Sorry, apologies.
Did you see, I guess, the fintech sector exploding to what it is today?
Yeah, no, I mean, even from where it is now, there's a lot further to go. I was sitting down with some investors a couple of days ago, and they were basically saying the UK is about 5 years ahead of the rest of the world, at least in digital banking terms, and even from a fintech perspective, right across the board, really leading the world. So pretty exciting.
Well, you also had the massive opportunity to acquire Harrah's Bank. Tell us, how did that opportunity come about?
So we ended up, basically we'd got to a point where we'd acquired a sort of, we had a group of what we call co-founders, early customers that came and helped to build the bank. And what we found, and it's interesting from your balance sheet observations, but actually there is a massive advantage to having some kind of existing business in banking. Actually, the chips are massively stacked against new players because there's an opportunity, because what they call back book, which is basically all of these old customers who are yielding loads of cash for the big banks, meant that actually it's much more difficult to build without an existing asset. So we ended up having the opportunity. Harrods was a slightly unloved little banking office in the back of the Harrods building, and we were offered it for a extremely reasonable price in equity, and so that opportunity to accelerate Tandem's route to market was something we couldn't turn down.
Well, similar to AC, you also raised money. You raised £74 million to date. What are some of those obstacles you have come across?
Yeah, no, I mean, actually referred to it earlier. I mean, one of the challenges for digital banking when we first started is everyone said it was a crazy and stupid idea. A, requires a shitload of capital. B, how are you going to take on these massive banks? I think, to be fair, that question's been pretty much answered as, a lot of certainly the neobanks collectively at this point have more current account customers than Barclays. So I think there's the challenges we faced early on, those barriers have been coming down and down. But equally, ironically, people are like, oh, it's an incredibly competitive market. I mean, the funny thing is, of course, the UK retail banking revenue pool is about 53 billion. So it's larger than like the next couple of industries put together. And there's a massive opportunity out there for a number of players, and not just in the UK, because the global banking revenue pool is more like a few trillion. And so there really is an opportunity to build a super exciting business that does great things for customers and also builds a good and sustainable business at the same time.
How many customers do you guys have now?
We've got 800,000.
So do you think one of the big banks will come and acquire you? Yes or no?
No, we had loads of offers early on. In fact, interesting, I was sitting down with some bankers who said, investment bankers, who said that they thought the banks were now ready to start acquiring neobanks. In fact, the only one that's really made a concerted effort was BBVA, which ended up buying Simple in the US, Holvi in Finland, and a big chunk of Atom in the UK. The challenge is, I think we're both slightly too big and slightly too expensive for them now, but we'll see how it goes.
Great. Well, thanks very much for being here. Christina, great to have you here. How are you doing?
Very good, thank you.
Good. So, same question. What did you have for breakfast this morning?
So I had porridge, juice, and coffee.
Great. So, OakNorth started a cut 4 years ago.
Yep.
Why OakNorth, and where does it stand in the marketplace?
So OakNorth got the license, the full bank license 4 years ago. And the reason why it came up, so I'm not one of the founders, I'm the CFO for OakNorth. So it was because prior to this enterprise, the two founders had another company, and when they were trying to grow the company, they struggled to get financing, and they said, well, if we are successful with this, we're going to go back and prove that entrepreneurs that are in growth mode can have access to financing. And then when that happened 15 years ago, they sold their business and said, does this problem still exist? And they look around and said, well, if you look at the universe of SME lending, at the lower end of the spectrum, there is very well served. You've got Funding Circle, you've got Ant Financial, you've got many other institutions that are serving that under £500,000, unsecured revolving capability that's quite easy and very efficient. At the higher end of the spectrum, you've got above 25, 40 million pounds more. You've got all the institutional lenders. Everybody plays there, right? JP Morgan, Goldman Sachs, HSBC, everybody plays there. And then anywhere in between, everybody plays it, but nobody does it right. And what does mean right? Right means to be adapted to what the entrepreneur needs. So we're talking about a client that an entrepreneur that needs 5 million pounds, doesn't have a huge finance department that is knocking on different doors of banks to find the optimal financing, right? They've got, if they're lucky, they've got a very good head of accounting, or sometimes they've got outsourced accounting services, right? So what they need is to explain the story themselves of what do they need the money for. If they want to, they have a restaurant chain, they want to expand to more shops, to open new outlets, and they want to explain it. They don't have much time to explain and to shop around, and they want, when you give them the loan, to be flexible to their cash flow, right? They don't have all the monthly capability to repay. So that's what OakNorth is offering to them. So we're offering to this middle child that was sitting there and not attended, opportunity to get a loan or the facility that they need that is adapted to their needs. So, and for that, the entrepreneurs are ready to pay slightly more than they pay to HSBC, but HSBC will take 6 months to give them a yes or a no. And they've lost the opportunity to get the rental in that outlet, and they cannot expand their business. So they say, for paying just a few bit more to you, my equity is getting bigger, right? Because I grow more and I expand my business and I can focus on what I do well without spending too much time. So that's the why OakNorth is here. And we thought it was going to be much smaller, the opportunity, and it turns out that it's bigger than we expected initially.
So in short, OakNorth, the bank, provides business loans and mortgages. What challenges have you faced in these challenging economic times when we're seeing places like Funding Circle struggling?
Well, Funding Circle, it's in a different segment to us. So the fact that our minimum loan is around the £1 million. We do a very good in-depth analysis. If you look at these institutional lenders, it just do the in-depth cash flow analysis, lots of credit controls, lots of benchmarks, scenarios, what if a scenario, what happened in the last recession for this sector that we are underwriting now, and then stress testing each one of their cash flows to make sure that they can repay the loan. So it's the starting point is different. And then we've got a level of security. All our loans are senior secured. And if you compare it to Funding Circle, in this case, it's unsecured, we're lending, right? So it's different. We are fully regulated by PRA and FCA. That means we've got all the controls. We speak with the PRA every month. They come to visit regularly. So we've got a shop that they like, the way it's run. So we need to make sure that assets and liabilities are well managed, and we've got sufficient buffers in capital and liquidity. So it's a different model. We don't have to go to the markets to raise funding. We don't have to go and sell packages of portfolios, securitization or syndication. So it's a very different model where we just, because we've got the bank license, we can raise deposits, and we just have the same deposits as anybody else, and we just fight for them with depending on how much we need with rates. And it's very simple model, very low cost.
And 130 employees now? More?
Right now, globally, so on the back of the success of the bank, when we saw early on that it was being successful, we said, let's do this. We do very well credit, right? Underwriting and portfolio monitoring. Let's expand globally, but we don't want to be a bank everywhere. So what we are doing is to contact other banks, big banks, that need help in sorting out their data, in creating good credit papers, and we are licensing to them. So right now we are 650 employees. More than the 70 that we were when I joined 2.5 years ago. So, and we are in the UK, but we are also in Turkey, Singapore, US, India, China, Hong Kong, and Germany.
You're one of the most profitable fintechs. You don't really do any tube advertising. You're quite subtle.
Yep.
How have you guys got to where you are today? Because I think also you paid all your incurred costs for 14 months, 11 months.
11 months.
Yeah.
No, in 11 months we were break even, and in 24 we recuperated all the initial costs for setting up the bank. So no, we don't do advertising because if you think about it, our clients are the SMEs, right? they want something that they trust. Initially, all SMEs bank with their personal banking. They start with their HSBC account, and then they ask for a bigger loan, not only the mortgage, for the business, and then the way they go into more adult financing is coming to OakNorth, for example, and they come because there's a referral. Somebody has spoken to them about us. We've got 85% of our clients in the UK, lending clients, come through networks. So we organize events so people that are in growth mode, they tend to network with people who are in growth mode as well. So they want to learn. What HR challenges do you have? What financing challenges do you have? So all of them are relating to each other, and that's we've got referrals from people that we said, well, no, this type of loan you're asking for, we're not able to give it to you. But we have had referrals from them because they said, well, listen, it was transparent, it was quick, and we liked it. So that's the way it's networking, the way it's working in the UK.
Great. Cool. Thank you. Carlo, great to have you here. How are you doing?
Very well.
Good.
And I had a green tea this morning.
You already know what's
I
coming.
was anticipating you. I saw a
Awesome.
pattern emerging.
So, Soldo, tell us what it is and where do you stand in the marketplace?
Yes, Soldo. Well, we at Soldo we like to think building the next architecture for pay and spend within businesses, and that means the way companies can deal with money, delegation, organization, on how money is being spent. Because to make money, you need to spend money, and every single company has costs to pay for. We look for, we target actually organizations, so businesses, but within businesses only where there is a multi-user environment and usually also a multifunctional environment. So a lot of people, a lot of function departments within companies, all of them having to tap into the money pool of the company to do whatever they need to do. It could be salespeople going around, and that's business travel, T&E, how you want to classify, people spending company money for themselves, all the way to company purchases, procurement, buying online advertising, all the way to more normal goods and services. All these things have in common one thing. They need to be based on the company money, and they need to be able to delegate and automate as much as possible the execution of these payments while retaining control. And that's the big challenge, because nowadays we want to delegate and have very flat organizations. Responsibility, delegation, you can do whatever you want, you're empowered. But when it comes to money, come back to daddy and I will tell you yes or no. And that doesn't work, because all the agility is immediately lost in stupid processes, inefficient processes, or processes that takes so much in the decision making that is actually hindering the growth of the company. So that's what we would like to do. Then it boils down to, yes, we give company a way to give every single employee a piece of plastic they can use for payments, as well as manage how in different roles within the company you can execute payments on both the card schemes, basically MasterCard, Visa, the kind of thing, or on the bank networks, the Forsyth payments, SEPA, and similar, and how you manage what happens after. Because if you are in banking, you tend to think my mission is moving money from A to B. When it has arrived at B, I'm done. If you're a business, you're doing something, of which one piece is moving money from A to B, but there is a why. We worry about the why. We worry about why a transaction took place, because by worrying why a transaction existed in the first place, we can manage what happens after that. And differently from consumer, in a business environment, paying is not the end of it. It's just the beginning of the long journey until you have properly classified, reconciled, and accounted for every single pound you spend. And that's a lot of work that typically happens in the back office with a lot of people doing repetitive activities, copying data from one system to another. And there is a lot that can be done to automate and make basically avoid having people do machine work in order for them to do humans work. We don't even need to go to AI. We just need to recognize that most of the back offices are very inefficient processes where the only thing that a CFO has, the full stack of the CFO is throw people at problems and design processes like a big biological computer where the software is called processes and everybody is there every morning doing this thing. And we believe we can do a lot there by bringing together the world of banking. In a way, banking, we're not a bank, but financial services, regulated and all that, with all the complexity of regulation and the world of business support systems, like your accounting, expense management, and similar, that are typically two very culturally distinct worlds, because if you do this, it's so complex that you just want to be the bank, and if you do this, you want to do a lot of other things, but you don't want to be the bank. But at the end of the day, the two things are the same, because from the business point of view, I'm doing things. I start by decision in the business environment. At some point, I go in the banking world. Then I come back into the business environment. By following this, you can optimize a lot of things.
And so how many customers do you have now?
We are approaching around 100,000 users. That means all the people using our product in our platform across all the companies. That means slightly less than that in terms of, let's say, cards. That is, users enabled to do payments, because then there are all the administrators that are not necessarily enabled to do the payment because they are the one who manage the aftermath of payments and all the other activities I was talking about.
And I guess just how difficult is it to get big partnerships with these big companies who are looking to use you guys?
Well, we target small, mid-market, larger accounts. Each of them, and you could say each size, each market in Europe and each industry segment end up exhibiting quite different requirements. So it is quite difficult. One common thing, if you look at the size, small tend to be quicker, tend to have simpler needs, easy to satisfy quite quickly, because at the end of the day, they're simple. They tend to churn. In many cases, churn out of existence more than churn out of our product for another product. It's just the nature of the small business. So they are quick but continuously sort of changing. On the other extreme, a large account, a large company, an enterprise, if you want, takes an enormous amount of time to get in, proof of concept, evolve, full deployment. But the land and expand opportunity there is huge. Then, of course, you need to bang your head on different use cases and different problems and integration with so many platforms. So it's sort of a mix of the two. We're going faster on small, seeding for the future on large, and trying to do both at the same time.
You mentioned regulation earlier. Ricky, if I come to you, regulation is becoming more and more expensive. It's becoming more tougher. How can governments and regulators help you fintechs become easier to work with?
Look, I mean, first thing to say is actually, I've got, we're regulated by the Bank of England, and you mentioned the PRA, that stands for the Prudential Regulatory Authority. It's a part of the Bank of England. And actually, and only because it's, not only because it's recorded, I do think they do a good job. And we actually have a couple of people who look after us individually, and that really means you can build a relationship, and these are smart people who you can work reasonably easily with. I think the challenge is bigger for FCA regulated fintechs, and that's because there are thousands, tens of thousands, I think now, of regulated companies, and you're lucky. Well, in fact, if you're unlucky, you get a visit every few months. If you're lucky, and part of the normal span of things, you get every few years. They'll pop in for a visit, and that's much more challenging because they don't know your business, they don't know what's going on, and they can be come across as a very sort of much more ticking boxes on things, because frankly they don't have the time to delve in and really understand what your business is doing. So I mean, I think there's lots more regulators could do, although if you look on the bright side, like there's a reason, one of the reasons that UK fintech is where it's at is because the regulator has been more permissive, has allowed more people into the system. Now that makes their job honestly a little bit harder. We're launching in Hong Kong at the moment, and Hong Kong has 7 e-money institutions. I don't know how many UK has, but you can probably tell me. It was a few thousand, 10,000. Yeah. And so, you know, the fact that they've allowed a lot of people to come in and get these licenses has actually been super helpful probably for people in this room as well as for players. And is your licensing basis e-money or? Yeah, so, you know, for some of the guys here on stage as well.
Can I add a perspective? So, as being one of the small fintechs that are only worthy of the FCA.
Worthy is the wrong word.
So, I think actually I disagree with your lucky, unlucky. So, you know, we've got we kind of say we're the fin in fintech. So, we want to do financial innovation rather than just tech, as I explained in our why we exist. So, we have these 5% per annum bonds. And the reason they're bonds is because we're not a bank and we can't do deposits. So we can't call them deposits, but we would like to reward small savers for the act of saving every month. We think that's a habit-forming mechanism. And we came upon bonds because we're going to take your money, we're going to put the 5%, we're going to put it in a trust. Doesn't matter if we go down, you're going to get your money plus 5% back. They sound like bonds, so we're going to call them bonds. Then you have something like London Capital Finance, which are also bonds, completely different set of bonds. They're actually mini bonds with none of the security or anything around it. So of course we get a lot of scrutiny from the FCA. And I think we've been very lucky that in the 0 to 20,000 space, we got so much love, I would call it, from the FCA, because it means that growing from 20 to 100,000 and beyond, we know all our ducks are in a row, everything that we needed to do is covered. I'd rather have that visit very early on than when we have 1 million, 2 million, 3 million customers, and you can guess what I'm talking about. But it's much harder to get stuff right at that level. And just from my previous banking background, I've worked across New York, London, Hong Kong, led global teams, so dealt with a lot of regulators. I think the UK is by far and away ahead of most other places. So the reason that Hong Kong has 7 e-money institutions is actually not a great thing for them. They should have more, right? They should have more competition. And I think where the regulator in the UK needs to get it right, which you're right about, is once people like us exist, can we actually compete with the big banks? And is there going to be sort of a PRA-FCA divide or a capital divide or a number of customers divide? Because having customers is not enough, because it takes you £0 to open a current account. It's only if I get your balance in and your payment volume in that we really matter. And can the regulator do more stuff to help us compete more? Maybe more, but they're still ahead of the rest of the world. So I'm quite praiseworthy of the UK regulators.
Christina, looks like you may have something to say.
No,
Regulation?
I agree with what you were saying. The UK regulator is one of the most forward-thinking that I've worked with, and I've worked with. Prior to being at OakNorth, I was at GE Capital, and I was working with the Fed, with the SEC, with the OECD, all different regulators in many European countries, Asian, and the US. So I think and it goes back to the ecosystem that Ricky was referring to earlier, regulator, money, and the cities here. So it's a very good place for fintechs, and I think they're doing a very decent job.
Hey guys, I hope you are enjoying the podcast so far. But just as a reminder, our main sponsors for this podcast is Tempo. Tempo is an end-to-end hiring platform connecting tens of thousands of people to temporary and permanent non-technical roles with the fastest growing companies. They are trusted by the likes of Monzo, Uber Eats, Bulb, and Babylon Health. Now, if you haven't checked them out, just visit heytempo.com.
And all of you, I guess, are running big teams. Carly, how have you found managing talent and recruiting talent?
Well, we're growing our team. And then part of that is also due to regulation, because coming back to the thing, I think deciding to be in a regulated business is not something you should do lightly. It is a very profound life choice in terms of philosophy. So you embrace regulation, you embrace the spirit, you have to respect the letter. Yes, you could be lucky to start in a place like the UK where regulation is actually, I believe, very high quality, and because of that, quite simple, because the best regulator is the regulator who knows the worst regulator is the one who doesn't know, so is anxious enough that because he doesn't know, he wants you to cover all potential bases, even those completely useless. So the UK is a very favorable environment. We are regulated both here and in Ireland, and I'm sure Bank of Ireland has a completely different standard, way more similar to what a bank is, as an example for an e-money institution. And then you say, well, if you were to go around Europe in the core markets, it would be similar, apart from small jurisdictions. And I don't know about Malta or Gibraltar, but I say if you go to the core main countries, it's not so different. So yes, that's one of the big drivers in our business. Otherwise, it will not be a regulated business. So you know a lot of the people you have to bring in is because of that. The real challenge in talent, we are, I believe, 130 now and growing. One of the drivers of growth is the duplication in the entire financial regulated team caused by Brexit. So we're now duplicated between the UK for UK and Ireland for the EU. And that will grow again. So that's a big driver. I think the big challenge is how can you bring in people who can embrace regulation for what it is, not trying to cut corners. That's not the way. And not thinking regulation is a necessary evil. It's not an evil thing. It's necessary, but it's not an evil thing. And at the same time, be able to innovate. Because the big thing is innovating without cutting corners, because it means pushing the boundary within the spirit, but changing the letter. I think this is one of the challenging things to do, embed the entire organization with the concept that if you're a regulated business, that's part of the core value of the company, even though you are working on the mobile app, even though you're working on doing advertising. It's not that then, well, there are those assholes of compliance that will come to me and say something, because that's the life you've chosen, or at least that we have chosen.
AC, I think when we first met, you had a team of 30.
Yep.
Now it's grown to
120, 25.
So what are you looking for in people, and what's your recruitment talent process?
It's actually quite philosophical. I like your line of it's almost like working for a regulated business is a philosophical choice, because it's so much easier when it's not regulated. Selling toothpaste is easier than selling 5% bonds, for example. But recruitment has to sort of come across just as an employee proposition, just like our customer proposition. If there's a reason for why we exist for customers to choose us in such a competitive space, if we're not clear about what you get by working with us, not importantly, not for us, because I don't think young people work for people anymore. They work at places for themselves. And realizing that and sort of structuring employment deals around that, not even contracts, it's not the salary. What really matters is, do we have a proposition for why you're going to give up 50, 60 hours of your life every week to work in a company that may not exist, frankly, in a few years' time? So it's completely different from how an HSBC would have acquired me competing with other banks. And keeping your pulse on sort of how people are making decisions these days, and it's not even an age thing, because you could be a data scientist with 15 years of experience, and you probably still decide more like the guy graduating from college right now than you do like me, based on some package or something else. So you've got stuff like no CVs during hiring. All our salaries are transparent across the 125 people. So you can see everyone's salaries, which means you can stop me in the corridor and say, hey, why does this guy get more than this? Why do we do this? Because I know from my experience in banking that these conversations happen anyway. I would want to be on the front foot of that and kind of preempt that if I'm doing my job right, and then you never have to stop me. So since we went transparent, I've had 2 people stop me out of a pretty big base, which is a good win. And then when you stop me, I can point to someone else and say, hey, this is what this person's doing, so if you want to get to the next level, we've got equal salary bands. If you want to get to the next band, then this is what you need to do, which is a way more constructive conversation than I've got an offer from Ricky, I'm going to leave tomorrow if you don't raise my salary, and that's just not good for either of us. So we do a lot.
I haven't hired any of your employees yet. Yet.
I can't say the same. It is philosophical, not quite contractual.
Yeah. So it sounds like you built a really strong community with your employees.
That's a really good way to put it.
But on the other side, the customers, you've seen people like Monzo, Revolut, they've scaled purely really down to their community. Ricky, how are you building your community with your customers?
Yeah, look,
and educate them on financial education.
It's super important, and obviously we're a purpose-driven business, so we're here, we exist to actually help customers live better lives with their money, and that's the best way to talk about that is not for me to stand up here and try and convince you guys that we're good. It's first of all to express that and how your products work and what happened, but also to encourage community. As I said, we're built with a group of co-founders, 10,000 people who are also shortly to be shareholders in Tandem as well, who essentially have worked together to help build what we have today. We still do events, so we do loads of meetups in our office, which tend to be either sort of tech or marketing focused. So you're welcome to come. We do about one a month, and we've continued to participate in some broader market initiatives as well. So, for example, right now we're teaching financial literacy in schools. We've adopted 4 London schools, and we get our employees to go out and basically work with those schools and talk about just the really day-to-day shit of how to look after your money, how to understand, because it's amazing. Schools don't really teach those critical life skills. You've not been taught, how to think about a budget, how to figure out what you need to live. But we try and educate people both within our customer community and more broadly in a younger community as well.
AC, if I come back to you, you're building a big community with your customers. How are you doing that?
So we actually co-created the whole thing with the community. So it's not just a community that existed sort of after we went live and we said, if you're a really eager customer, you join the community. It was called the What If back then. That was before we even had Dozens as a brand name. And they would tell us stuff like, so for example, the bonds, we thought we were going to call them trains because the train would leave the station every month and come back every month with a bit more money. We thought it was a great idea. It was gamified. And they said, do us a favor, treat us like adults, call them bonds. And we said, okay, great, we'll call them bonds. And there were other gamification ideas that they liked, and then we put them in. So I'm not a big fan of usability testing in the sense I think bringing people in to check stuff on mobiles, putting a flashlight on them, is not the best way anymore to see if stuff is usable. But proposition testing, whether we should exist, whether this should come to life or not, is this going to solve a problem for you? We've used the community since day one to do that. It's sort of how you put it, like I love the way of like the employee community is the precursor to the customer community. We've had a lot of people that we've hired from the customer community into the employee base, and then the third concentric circle is the other customers. And we try to get people sort of in and in to the community first and then potentially to employees if you really like us. Because we don't really see a difference between people who work for us and then people keeping money with us, because at an early stage, all of these people are trusting us with their money, with their jobs, with something in some way, shape or form. So for me, it's quite a blend between those 3 lines.
So fintech is obviously a very fast-paced sector, but we are in an interesting political time at the moment. Carlo, is the UK still the best place to launch a fintech? And where do you think the fintech sector is going?
Well, it depends on the day. Really, if you were to think up until before Brexit, there was no doubt that the UK was both, of course, the major hub for startups and financing and culture, people, anything, if you were to build a digital company, but it was the place where the most expert and the best regulator in Europe happened to be. Mm-hmm. So it was totally a no-brainer to start. If you were to do fintech, this is where you wanted to be. That's you don't do fashion in Frankfurt, you do fintech in London. Then Brexit sort of changed this, because being regulated here and exposed to the loss of passporting means, well, you know what? And by the way, you know what is the fun thing? That if 1st of November, UK was to get out of the EU with a no deal, number 26 will be entitled to sell here. Monzo would not be entitled to sell in Europe anymore, because of the way the UK has decided to respect and consider equivalent the European license for 3 years. But of course, the reverse is not true because they decided to go in a way that would have triggered a loss of passporting. So is it still the best place if you are targeting Europe? Possibly no, because of this. If you're targeting one single market, of course, the UK is a very interesting, very mature market for anything, fintech or electronic payments or anything like that. So probably if you have to choose and remain within one single European market, of course, the UK is that. It's also more competitive because of the same reason everybody is coming. But if you are using this as a springboard to go in Europe, until you know exactly what's going on, possibly it's no longer the right thing. If it's the right place to then go to Singapore because of special relationships with a certain number of jurisdictions that the UK has developed, it could be, but then again, all that is quite unsure and transient. So that's the thing. I would say before Brexit, yes. After Brexit, who knows what Brexit is. Once you know that, you can say.
Ricky, you're launching in Hong Kong. Do you think the UK is still the best place?
Look, I mean, I don't completely disagree with you, what you've just said, Carlo, which is, we are as well having to, apply for European licenses and go through all that good fun of working that through. And quite frankly, I would have been going to Europe and not Hong Kong initially had Brexit not been happening. So, but I actually received a lovely letter from European Central Bank saying that my initial savings accounts I'd opened in Germany needed to be closed down or I would never ever get a license in the territory again. And so I think, back to your point about not being reciprocal about their arrangements. So I do think it's a challenge. I think, as you say, like, if you're aiming to start a one country fintech, I'd say UK is still the best place to be. If you're trying to start a global business, there's a question about whether you'd consider a larger market US, larger market Europe, where you can sort of launch pad from there. Historically, UK has been the only place to do it. I mean, there are very few pan-European businesses that started out. I mean, in the banking sector, it's really just N26, that have started out anywhere other than the UK. But I think that may shift.
Christina, what do you think?
Well, in our case, I agree with what you two were saying. In our case, we don't need the passporting capability for doing what we're doing. We're doing licensing for others that have the license already. So that's why we decided to, if we want to grow globally, does it make sense to start having another more mushroom bank licenses everywhere? I went through that in my past. Many others in OakNorth were doing the same, and we decided not to do that. So it doesn't really impact us. We are, as I said, partnering with many big banks in other countries, and they've got the license. We go proactively and meet with the regulators just to make sure the regulator understands the model that OakNorth is bringing into those banks, and that we're not jeopardizing any of the controls. We respect all the regulators, but for us, still the UK is a very good one to start from and to keep the bank here. But then for growing more, we go to other markets, but with other partners that are the ones regulated.
So before we hand over to the audience, there are lots of fintech companies out there. So if you could be running any of the fintech companies, which one would it be, apart from your own? AC, let's go with you first.
I got the breakfast one first. I think just not because I would love to run OakNorth, but because out of respect, I think the fact that we have a fintech that's profitable, I think it shares a lot of ethos with us. So we're not after the current account numbers and acquisitions. We, as I said, cost of acquisition and revenue. Maybe I think more like a banker in that sense, and maybe that's what's common between Rich and me. I would love to say OakNorth just out of respect for you.
Thank you.
Christina, let's go for you then.
Was thinking of another one, profitable too. It's easier to run, right? One of my favorites is, we're looking up at them, is Adyen. Adyen, we look at them a lot. And That's the other one we put, and I think that Rishi and Joe would share the same that I'm saying now, because it's probably the one other we're looking up to, see what we can learn from them, what have they done in their journey, they're way ahead from us, but they've got a fundamental business that now is expanding globally with big accounts, big clients, tier one clients. So that would be the one that we would be happy to be there.
Ollie?
Well, I agree on Adyen being very interesting, but probably Stripe is a little bit more interesting as the way they grew up from quite simple in a way, starting proposition that then was actually scaled up to become a really huge thing, and now is going to be competing in many different areas. So I think that's quite interesting. I would be totally terrified to be in the consumer space. I've been there, and I never found. I just said it's not going to be me doing that thing. I couldn't find the way to go. So I went back to very boring business things, complex and all that, but that more.
Less predictable.
More country for old men than the new glitter things. But I'm really on the sideline and looking the match because I'm really curious to see what's going to happen. And that I've been part of the first generation of challenger banks. I built one of the first in that case in Italy, and it was '98. So the first generation when digital meant internet banking, the modem, starting connection. Among all those that were launched and were born in that very period, all across Europe, I remember. In Germany was one of the big pieces where online banking was one of the main reasons why of getting an internet line. So important was in that market, I think. The one I found is one of the few still surviving, very healthy 7 billion thing. But I can tell you one thing, the reason it's so wealthy, is so valuable, is so successful, unfortunately had nothing to do with the real technology, modern things we did at the very beginning, but just because it morphed into a very successful, quite traditional asset management bank. So the reality is, if you look what they're doing, is it sexy? No, but this is where the gold is in many areas. And it's not evident, it's not clear, it's not so easy. And probably being not sexy, you tend to overlook, but that's where things are. On the other hand, we build companies because we, for whatever reason, I'm masochist enough to get a lot of fun in working incredible hours banging our head on incredible problems. So we need also to find something that's also sexy. Otherwise, you would be doing that only for money. And
Ricky, how about you?
I'd probably go for Nubank in Brazil. I don't know if people have heard of Nubank. Nubank's actually the largest challenger bank, going for 10 million customers now. Took a similar route to us and came to market with credit products first. Coming back to your point, I mean, I think while banks play all sorts of important functions, fuck most of them up, but one of the most critical ones is credit, and figuring out how to make that work for customers and actually be healthy rather than an unhealthy thing is a really big challenge, and one that we think we're up to. Nubank has sort of cracked that in Brazil, and is now spreading out into the full range of banking products and doing a fantastic job. We share a lot of shareholders, know the CEO, really interesting business.
Cool. Well, look, thanks so much for your time, and please join me in thanking the guests.
Thank you, guys.
Does anyone have any questions? I think Nora is going to come around with a microphone. Nora is there. Please say who you are and name of the company. Let's go with
right behind you,
Charlie.
Right, there you go.
Hi, Charlie from Lawyer. There's been a lot of discussion today about regulation. I run a startup in not the financial world, but in the law world, which is a similarly regulated space. We're fairly early on, so I wanted to ask you, in the early days, do you embrace the regulation and get the approval, or do you try and delay that as far as possible and make sure that your business model can sort of ensure that you don't need to be regulated until it's absolutely necessity? Is it an opportunity for some success, or is it just a necessity?
I'd argue you started dialogue with the regulator early. The regulator, bizarrely, well, like anyone else, like your girlfriend, boyfriend, whoever it may be, likes to know things ahead of time. And so even if you're going to run without without actually being a regulated entity, to start talking to them and dialoguing and saying, look, this is what we're thinking about, but actually keeping, helping to seek their advice in the extent to which and the appropriate time to be regulated is really important. I mean, the case in point, in banking and sort of for both ways is Revolut, which is super interesting because they basically they didn't have any licensing at all to begin with, like literally none. They were borrowing somebody else's e-money license here and something else, and then they expanded really fast, and now they're trying to retrofit and retrospectively adopt the banking license. They applied in Eastern Europe, they got one, but then the European regulator, they told them they couldn't passport it anywhere in Europe. There's some other places where they may have tried and may not have been so successful, that is proving more of a challenge for them now. I think that's kind of to some extent that they benefited. So on one hand, they're a positive example, but on the other hand, in that they could grow faster. But on the other hand, they're slightly struggling with that now.
I would add to that the key is where you think your core value creation, your sustainable core value creation is going to happen. You don't getting regulated is like getting pregnant. There is no halfway through. Either you're in or you're out.
How do you know?
I've participated.
You did a seed investor.
Exactly.
Didn't do any of the work.
No, so the thing is, you really want to be 100% sure if you're getting that is worth your thought. Otherwise, there are other ways for you to have clear, you start here, you end here, somebody else will complete the value chain. Never have a doubt in between. Otherwise, you will end up with the worst of both worlds, and will actually detract from your real value creation and defocus you. Think of everything like the iceberg. Whatever you think is going to be the size of it, the submerged part is much bigger.
Yeah, practically, I'd say if you think your business needs a bank license at one point in time, the sooner the better. If it's in the UK, even better, because the UK regulator is so pragmatic. It will tell you, you don't need the license now, or you will need it later, or you can partner with this one or the other. So I've been part of several conversations with new people that are trying to apply for licenses, and they're very, very pragmatic, and the sooner the better.
I think maybe just last one from us is, there's a little bit of a dichotomy in your question, right? So if you can prove the business model without the license, is it not a different business model? Which is kind of the question that we had at the beginning. So we're actually the only fintech with both e-money and an investment license, which is part of the reason why we had so much FCA love. But to make the decision whether we go for it up front or we do a Revolut and sort of borrow and sort of make this work and see if the app works, they're completely separate businesses. So we're going to the customers or the investors with like, we're a platform, we borrow licenses, give you a good UX, and that's why you come to us. Or you're going to trust your money with us because we're regulated by the FCA, not just for e-money, but also investment management. They're very different. So how do you prove the latter? By experimenting with the former. So I think you need to make up your mind. And if you, as everyone else said, if you need the license, sooner the better.
Cool. A couple more questions.
Thank you, Charlie.
Let's go.
Hands up high.
Hi, my name is Seth. My question is, apart from Brexit and, if you're unlucky, having the FCA visit you every 2 months, what threats or risks are fintechs facing, apart whether it's cyber, brand, so on?
at the moment, you see a lot of fintechs in the landscape, and there's lots of, the risk is the lack of equity to keep growing without being profitable. That's the main risk, right? That's going to be going on for some time. In any sector that's happened, there's cycles, right? If you remember the dot-coms, like many years ago, there was a lot of investment going into them, and it was going on for years until at one point investors said, we're happy with the growth of revenue, we're happy with the TAM, the total addressable market being big, but at one point you have to bring returns, bring profit at the bottom line, because at one point in time we want to be able to either sell my shares or have a dividend in the future. So that's one of the main risks, that the fintechs don't have a capacity to monetize or to become profitable and to be sustainable. So the challenge is that there will be some consolidation, there will be acquisitions or mergers. So that's one fundamental challenge to any sector. But the fintechs at this point in time, it's a space where there's a lot of equity coming and crowdfunding or institutional investment that is coming in, and that at one stage, and it could be a very long cycle, will say, well, now show me that there's a return.
Ricky, do you have something to add to that?
No, not really. I mean, I think that's that's an interesting perspective. It's a question of where. I think there's a revenue bit to come before we get to the profit bit on that. But look, I think there are plenty of threats. I think data and some of the new data legislation is actually a big challenge. Not only if you have a data leak like Carphone Warehouse or British Airways, one of these. So making sure that you have that data security locked down is important. One of the interesting things is, and we see this on the inside, fraud is growing all the time. There's a lot of smarter and smarter, companies out there trying to take advantage of fintechs or anyone who handles money. I think we've been lucky in that while our avoided fraud has been going up, our actual pound fraud has been going down over the course of the last couple of years. That's in part because it started a bit high, but ultimately, I do think that's a threat for anyone who actually handles payments in cash.
Can I go in with a bit of a cheesy one? I think that's true. The profitability is obvious. I think it's purpose. What's in it for you? Is it enough that I start a company because I want to and I want to inspire 100 people to work for me? If we go big, does anything change? So we got $100 billion plus investment into fintech in the last few years, and fewer households have emergency funding today than they did 10 years ago. So what's actually changed? And if any of these companies that exist today as small ones grow big, will they become the new old banks? And what's in it for you at all? So I think you've got to obviously have profitability, because otherwise we wouldn't exist. And I'm conscious that we are the smallest ones, so maybe we don't have as much of a right to answer the question as the other ones. But the reason we exist is we think we have more purpose than anyone else, and that's a really good reason to start a company. You need to stay profitable, but that shouldn't be the reason you start the company. That's my 2 cents.
Final question. Let's go to the back here.
I'm going to go to the back. Sorry, guys.
Hello, I think it was me. Mark Loveridge from the Royal Mint. In the case where there are system outages and challenges are faced, how important do you think it is to have cash as a sort of hard cash as a fallback for customers? And do you see any correlation if there is a downtime in the system that people are drawing cash out to be able to make their payments?
So we, first of all, we're saying that there shouldn't necessarily be system outages, and actually, what we've seen is we have seen even some of the neobanks have teething problems. Tandem's luckily never had any payments outages at all. But if you're in the cloud and you've got the main reason for these things to break down used to be your servers somewhere in Milton Keynes had all collapsed and therefore weren't able to serve anybody up. We've got multiple regions running, multiple availability zones within each region. We're running actually much better kit than the stuff the big banks are running. You shouldn't have any downtime, and if you do, you haven't designed your systems properly to prevent that. So I mean, look, and not to denigrate the Royal Mint, because I think it's jolly important, but I think also as we move towards an all electronic world, there need to be certain offline mechanisms designed into products, and indeed contactless has some offline limits already designed into it, where people can access that offline and then come back and retrieve those electronic stores of value later. So I do think there's a challenge actually for regulators as we move into a cashless world. I think cash is very important if you want to do something illegal or very naughty that you don't want anyone to know about, but and plays an important role there, along with Bitcoin, if you want to go really digital. But I don't think cash is necessarily required as a backup. Just like you don't really need to have paper backup for all your computer files in the company. You just need to back them up properly.
Is he?
I actually agree.
Excellent.
Yeah.
So, sorry, do you want to add something? No. So, just before we end and have Ben, founder of Tempo, to come up, my latest guest on the podcast was Mark Randolph, co-founder of Netflix, who's just written a book on That Will Never Work, a phrase that was often said to him before it came the community of 150 million subscribers. So what advice would you give to entrepreneurs if they're being told that will never work? Is he the start of you?
You love me. I think there's good reason why people tell you that. It's sort of maybe too romantic to say, like, every time you hear that, quit your job and start a company. Starting a company is hard. It's, the first time I realized the gravity of starting a company was not when I took the decision for myself, is when someone else hands in their notice to come work for you. Because you realize there's no brand on the door, it's actually you. It's a personal commitment to you. And that moment, I'd never forget that, no matter how big we grow. And if you're not sure about all the other things that we spoke about, which are slightly philosophical but slightly practical, like purpose, profitability, business plan, differentiation, then why would you convince others to quit their good jobs to come work for you? And obviously want good people to come work for you. So when you hear that phrase, I guess you have to really question why someone else thinks that. Do you know something that they don't? Do you see the world differently? Do you have enough conviction? And only if you pass through your filters on that, then start something. I wouldn't go so far as to say every time someone says that, they're just old school or something. Sometimes they're good reasons.
Carly?
So
advice to entrepreneurs.
Yeah. Well, I believe the key thing is, if you were to summarize in one single phrase, is make sure you're doing something you must do and not something you can do. Can do is not enough to sustain a company, and all the hardship and the need and the energy needed to create something that's sustainable and long lasting. Yeah, you can do things, and it's absolutely meaningless. There are things you must do. You must do, I mean, the whole market requires you to do it. We'll be able to cheer when you do it. We'll pay you for what you've done it. That's the real measure. It's so easy. It's like, what is the challenge in fintech? Yeah, so many people said, oh, wow, cool. Now I can have my name on a piece of plastic and put it alongside an app and put it and add on the tube. Yeah, okay. The barrier has lowered a lot. And you can do that. And then, so what? Where are you going to go? It's so difficult to find the real reason to keep you alive. It's creating a company is an act of violence on the universe in making possible for you to exist. Yeah, but because that's the reality. You have to go against the salmon, against the current. You must force, with a lot of energy, the world to make space for you to exist. And probably by doing that, you have to kill somebody else to take their space. So it requires a lot of energy. And you have to make sure that what you're trying to do warrants that and will be able to justify that. Otherwise, you will be doing something, have fun with somebody else's money. That's cool. That is, if you can do that, why not? It's a way to have a good experience on LP's money. But then you go back to square one, and you still have to demonstrate you are able to do something.
Christina?
I think adding to that is something that you really love and enjoying every day. It's every day. It's just 24/7, right? So you have to grow it, you have to live it and breathe it. Make sure you absolutely love it and like it.
Ricky?
Purpose and human-centered design, which is sort of a bit of combining these two different things. I mean, first of all, you want to do something that you feel passionate about. ideally that serves a cause that you can be excited about. So you talked about serving businesses. Like, I can't get excited getting out of the bed in the morning, despite having started lots of small businesses and going and making businesses' lives better, because I actually think businesses deserve to die if they're shit, and humans don't deserve to die if they're shit. Purpose, the first piece. Human-centered design is the second piece, which is coming back to your question, which is just because somebody tells you it's a shit idea, that's a terrible indicator. And often, even if 20 customers go, "Oh, I don't like that," you need to actually not ask them whether they need a car rather than a faster horse. You need to actually demonstrate what a car looks like versus a faster horse, get them to try it, get them to actually go in, delve into their lives, find their real problems, present a solution, get them to try it, not to look at it, to comment on it, but actually to try it, and disagreeing with your point on actually user testing, and then go, wow, I really like this. Because often you get a different response there than the one that you get over the pub when you go, isn't this a great idea? Because some stuff that seems like a fundamental shift to you could actually just be a little moment of delight, which might make a nice feature, but ain't going to do shit for a company. And other things, that might appear to just be a moment of delight might actually be a really fundamental feature. I mean, one of the really interesting things in digital banking has been real-time alerts. Like, it feels like just something very little. Like, I get a ping every time I get a transaction. But it's absolutely transformational. First of all, in terms of customer engagement, because you get a ping, you're much more likely to go and actually check your app. And second of all, actually, when I walk out with contactless and everything else, I pay on my watch. It's really handy that it pings through on my watch or wherever it is, if my phone's in my pocket, and tells me where I'm at, relative to my budget or just how much I've spent. So, there are these different things that you could get confused about without some good human-centered design. Sorry.
We
Wrong
actually
answer.
agreed on user testing. So if you ask the users, they want the faster horse.
Yeah,
so,
exactly.
But just to differentiate on slight nuance between your two views, right? New product, push it, go for it. New company, I think you need to sort of be a lot more circumspect, because as you say, it just feels like such a current against you. I think the bar is slightly different. Well, on product, we will innovate till the cows come home, because we exist today. We already have the employees and we have users and we can push against it. Would I start another thing because I thought everyone that I spoke to was wrong about it? That feels so many other lives at stake is a different bar.
Awesome. I think just before we end, Ben from Tempo is going to come up and say a few words. Come up. Just while he's walking, our next event is on November the 20th. We would love to see you here, and is on the future of retail. So we'll be sending out details tomorrow. But Ben, over to you.
Hello, sorry for coming so late. I was meant to be here before, but the delights of the tube delayed me. So we're Tempo. We have the pleasure of sponsoring the Makers podcast and Ollie, so thanks for coming and thanks for listening. Tempo is an online hiring platform, so we work with some of the most innovative companies in the world, including a lot of fintechs like the Monzos, Starlings, GoCardlesses of this world. I'm really born out of the belief that recruitment is probably the most important thing that all companies do, like their success or failure hinges on the people that they hire. But as a process, it's probably also the hardest thing they have to do. It's still incredibly slow, outdated, inefficient, expensive. So we decided to point tech at that problem, automate a lot of the time-consuming rubbish stuff, and make it a much quicker, easier, more transparent process. So over the last 2 years since we launched, we've worked with about 2,500 companies and helped them reduce average time to hire from about 40 days down to 4. So making good progress and continuing to do so. But really interesting talk and very happy to be sponsoring you guys.
Hey, thank you. I
Cheers.
think if you're interested, it's heytempo.com.
Heytempo.com, yes.
Cool. Thanks all very much for being here, but please can you join me in thanking our speakers once again. Please do stay around for networking and meet some cool people.
Hey guys, so thank you so much for tuning into today's podcast. It was great to hear from the FinTech founders, Ricky from Tandem Bank, AC from Dozens, Carlo from Soldo, and also Christina, the CFO at OakNorth. It was also great to hear from Ben, one of the co-founders at Tempo, who are our main sponsors for today's podcast. If you haven't yet, please do head over to heytempo.com where you can see all the information about them. Now, just before you go, we have some incredible upcoming guests. They include the founders from Netflix, Leon Restaurants, and also one of the dragons from Dragon's Den. So we hope you tune in into our next episodes. But just before you do go, please do subscribe to the Makers Podcast and leave us a review. All your feedback is greatly appreciated. Thank you so much, and until next time, bye-bye.